Good afternoon, ladies and gentlemen, and welcome to the REGENIX Group PLC investor presentation for the interim results for the 6 months of the 30th of June 2021. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged, can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Daniel Lee, CEO, and David Cogue, CFO of REGENIX Group PLC. Good afternoon.
Good. Hello. Thank you, Mark, and thank you to your investors for sharing some of your valuable time with us today to give us the opportunity to provide an interim update on REGENIX. We just released our strong mid-year 2021 results. So we'll spend the next 20 minutes discussing the company's focus, our activities, the results, as well as the performance that we had during the first half of 2021. And at the end of the presentation, we'll be able to take some questions. So first is the disclaimer slide, which can be reviewed when you have the opportunity. Okay, thank you. So first, I'd like to introduce the presenters. I'm Daniel Lee. I was appointed the Chief Executive Officer for REGENIX in November of 2020. I've been with the REGENIX organization since January of 2019, where my first role within the organization was President of U.S. Operations for the Cellrite division here in San Antonio, Texas. I have over 30 years of experience in commercial as well as technical roles in medical device as well as biologic companies, specifically tissue companies. I joined REGENIX really because the company had the unique opportunity to provide allograft and xenograft tissue products utilizing the company's unique technology platforms. The opportunity to provide these products in the global marketplace, which is something that is truly needed. David?
Thanks, Danny. My name is David Cogue. I joined the group in January of this year. In the 7 months I've been with the company, I've been impressed with the strength of our customer relationships. Actually, we just came back from the American Academy of Orthopedic Surgery convention in San Diego and had a very strong meeting with our strategic partner, Arthrex, there. As well as also impressed with the strength of our portfolio that covers both allograft and xenograft tissues on a global basis. By way of background, I've got over 29 years in the medical device space. I started, ran, and then sold a contract medical device manufacturing company. Along the way, I had the chance to work with Danny for several years as Chief Financial Officer at Interim Biologics. And I started my career on Wall Street, first in investment banking at Solomon Brothers, and then in corporate finance at GE Capital.
So during the first half of 2021, we also had some changes at the board level. John Glenn, who is an existing board member, was appointed chairman in January. But in January, we also added 2 additional board members, Brian Phillips as well as Trevor Phillips. They're not related. Both of those individuals provide us tremendous commercial as well as financial experience as well as leadership. And then this is something that we look forward to their guidance as we are a commercially focused organization, and we are very focused on executing on our strategic plans. So now a little bit of background on the company. So Tissue REGENIX is a global healthcare organization which is focused in regenerative medicine. We have a particular expertise with tissue-based products. Our technology platforms, which are BioRinse and D-Cell, aim to preserve the inherent properties of tissue through gentle processing, but at the end, delivering a safe and sterile tissue product. Our existing, as well as our new products, are all developed from these technology platforms. And our global operation utilizes these technology platforms to service our customer needs. So customers being our patients, our clinicians, our distribution, as well as our strategic partners. As I mentioned previously, the company is uniquely positioned with both allograft and xenograft tissue products for the growth in regenerative medicine and helping to transform healthcare. Little overview of our product portfolio, which is categorized into 3 main tissue families. We have bone-based products, and all of these use our BioRinse technology platform. The leading product in this category is Concentrate, which is a demineralized bone matrix product. It's distinguished in the marketplace by its ease of use, but more importantly, that it is 100% bone product, which is verified for osteoinductivity. It's tested for osteoinductivity with every batch in which we process. That's a very important feature, since when a clinician uses our product, they want it to form bone wherever it is used. The next family is our soft tissue products, which utilizes our D-Cell technology platform. D-Cell is characterized by its ability to remove 99% of the DNA. The leading product in this category is DermaPure, which is a human dermis product. DermaPure has superior handling properties, but also once it's implanted internally, externally, clinicians note how readily accepted the graft is and how quickly it incorporates. The last tissue family is our birth tissue products, which are also processed using a proprietary method. The leading product in this category is AmnioWorks, which is an amniotic membrane, which is known for not only its aesthetic qualities, but also the clinical outcomes, which when it's used in ophthalmology or other indications. So why is regenerative medicine such a growth area? Simply, patients want to have their quality of life restored after a traumatic or degenerative change. Our products have the opportunity to treat these conditions in multiple specialties as well as indications. Our commitment is to maximize the gift of human tissue donation through our allograft tissue-based products, but we also provide allograft as well as other tissue-based products to help as many people as we can around the globe. I'd like to spend a couple of minutes talking about our 4S execution focus, which is something that our entire management team is focused and driven to execute. Our 4S focus represents both the serial progression of the group's growth trajectory and the key focus areas that allow our team members to direct their efforts to the value drivers which contribute to the group's long-term success. We believe this to be our map in generating shareholder value. So let me walk you through the highlights of these areas. Supply. Supply is fundamental with a tissue-based business. The tissue business is a unique business where substantial resources need to be applied to source as well as store an adequate tissue supply. In addition to tissue supply, you have to have the ability and capacity to have the unique environment to process this tissue. So as you process increasing volumes of tissue, you can generate products. Next area is sales revenue, which is a direct result of the supply. The adequate and increasing supplies of products that are in demand result in revenue growth. Our diversified portfolio allows us to generate revenue from multiple customers and multiple specialties. Sustainability. Our focus on revenue growth and controlling expenses allow us to achieve sustainability. Our goal is to be a standalone organization without the need for external capital. And the last of the 4 S's is scale. As we succeed in sustainability, this provides the resources to reinvest in the organization. Scale provides growth opportunities. We can invest in new technologies, products, licenses, partnerships, potentially look at mergers and acquisitions. So now let's look at how we performed on the 4 S's, how we delivered on the 4 S's during the first half of 2021. In just a few minutes, David will go through the solid financial performance, but right now I'd like to talk about some of the activities which we achieved during the first half. On the supply side, we increased our capacity to recover, store, process, and distribute tissue with our phase 1 expansion. We have more donors, we have additional processing capacity, and we have the potential to distribute more products to fulfill patient needs as well as our customer needs. Sales revenue. Throughout the pandemic, we continued to process tissue so we could rapidly adapt to the increased volume needs of our customers. We continue to strengthen our portfolio by adding new products, but also by adding the clinical data that is needed to help drive adoption of our products. And we also continue to have discussions with other strategic partners to help us grow as we move forward. Sustainability. We performed additional restructuring in early 2021 to meet our business needs as well as increase efficiencies within our organization. And we'll continue to identify ways to be more capital efficient. And the last area is scale. Our commercially focused board is committed to driving our focus areas so we can scale. Now I'm just going to take a little more deeper dive on our supply accomplishments. Our phase 1 capacity expansion was completed in June of 2021 on time and on budget. This is in some ways a remarkable achievement since all this was done during COVID, where we had material shortages, labor shortages, COVID-related delays. But with the phase 1 expansion, we increased our donor storage capabilities. We centralized our distribution services, and we also added additional processing space in the clean rooms in our existing facility. We spent £2.1 million for the phase 1 expansion, but this also included some costs that we would have incurred during our phase 2 expansion plans. Overall, the phase 1 expansion provides us $30 million of revenue potential for our BioRinse products from our San Antonio facility. For the basis of comparison, our BioRinse products in the first half of 2021 generated about $5.8 million of revenue. So we have some headroom with our phase 1 expansion capacity. Now, the initiation of our phase 2 expansion plans, which is anticipated to take a 12-month lead time, will be determined based upon the return of demand in the marketplace. The phase 2 expansion, the plans included adding 10 additional clean rooms, which would potentially add $50 million of revenue potential to our San Antonio facility. So the combined revenue potential of phase 1 and phase 2 is $80 million in San Antonio. During the first half of 2021, we also developed 2 new product line extensions to our D-Cell family of products. The DermaPure Mesh product allows for greater surface area coverage, allows for wound drainage, and it also saves the clinician time in the operating room, so they, or he or she, does not have to mesh this product in the operating room. This product is used in the repair and replacement procedures in general, plastic, as well as trauma surgeries. This product diversifies our product line and provides entry into competitive accounts. The other product that we added in the first half of 21 was Venu, which is a pre-cut, pre-shaped dermal graft used in urological and gynecological procedures. This saves the surgeon time in preparing the graft in the operating room and has been used in pelvic organ prolapse procedures. POP procedures, there are approximately 300,000 of those procedures in the United States. It's a frequent issue for women post-childbirth, and this product is available exclusively through Arms Medical, and they anticipate that they can capture 10% of this market in 5 years. So at this point, I'd like to turn the meeting over to David, and he can review the solid financial performance that we enjoyed during the first half of 2021.
Thanks, Danny. For the 6 months into June 30th, sales revenue for the group was up 12%, or 21% on a constant currency basis. Overall, our shipments in the United States increased 44% from the prior year levels. The key driver for this growth was our orthopedics and dental division, which returned 26% sales growth, or 37% on a constant currency basis. Cellbright's performance was keyed by a strong second quarter, as vaccine rollouts in the United States allowed us to begin the initial engagement with the backlog of elective surgeries that was created during the pandemic. At the gross margin level, our margins were consistent with 2020 levels at 46%. The financial benefit of the group's restructuring can be seen in our admin expenses, which decreased £913,000 as compared to the first half of 2020. That's a direct increase to sustainability. Exceptional items in the first half relate to the restructuring that we disclosed in January of this year, as well as the winter storm event in February that briefly affected our San Antonio operations. The combination of sales growth and tight expense management allowed us to achieve significant operating leverage, as our EBITDA loss decreased 48% on a 12% increase in sales revenue. We flip to the balance sheet. Our cash balance at the end of the period was £6.6 million. With the phase 1 expansion complete and our reduced burn rate, this cash balance should fund the company through to profitability. In the other working capital accounts, we became more efficient. Our inventory turnover increased. In our accounts receivable, the days sales outstanding decreased. As we look at the other asset accounts, we do expect the R&D tax credit to decline going forward as the group shifts from a development focus to a commercial focus. On the liability side of the balance sheet, the financing through MidCap is interest only through the second half of 2023. There's revenue covenants associated with that financing, and those are comfortably met. In summary, we're very pleased with our first half results as the group began to recover from the pandemic. It's really a strong down payment in our path towards sustainability.
So in summary, to achieve long-term value for our shareholders, we are focused on executing on our 4 S's: ensuring supply, driving sales, achieving sustainability, and with all 3, we can scale and continue our growth plans. So we had a solid first half of 2021 performance, which are solid steps on our path to sustainability. Our current capacity will meet our short to medium term plans. And despite some of the ongoing uncertainties, especially here in the United States with the Delta variant and regional postponement of elective surgeries, we remain positive on a sustained recovery and our future growth. So at this point, I'll turn the meeting over to Mark, and we will be ready to take some questions.
Fantastic. Daniel, David, thank you again for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. Just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. And I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected to the opportunity to provide your feedback in order the company can better understand your views and expectations. Daniel, David, perhaps before we move on to some of the questions received during the live event, we did have a number of pre-submitted questions, and if I may, I'll just start off that Q&A session with those. I will just read them out. The first one, I think for you actually, Daniel, is when is the next phase of expansion planned for the Texas facility?
Well, the phase 2 expansion will be implemented as the market demand dictates. The phase 2 expansion, as I mentioned during our presentation, is to add 10 additional clean rooms. It's expected to take 12 months of construction time, and then, of course, once it's constructed, we need to certify and validate the new facility. It is expected to cost between $3.2 to $3.8 million, construction costs as well as equipment costs. But it is all now dictated by as demand returns. As right now, with our phase 1 expansion, you see we have a little bit of headroom right now in our current facility. So we don't have any immediate plans, but it's something certainly that we will continue to monitor over the near term to when we pull the trigger on the phase 2 expansion.
Fantastic. Thank you very much indeed there, Daniel. David, perhaps I could address the next question to yourself there. We see in the news at the moment that several UK companies described as undervalued in the market are being bought up by US companies. Is this something the board would entertain for TRX, or is there a determination to go it alone and realise the company's potential?
Thanks. That's a great question. Our board and our management team, as Danny discussed, we're really focusing on the 4 S's, and to the extent we deliver on those 4 S's, we will drive shareholder value and increase the share price. All that being said, we are a listed company, and should somebody decide that they want to own Tissue Regenix, and would be the board would definitely consider that. But our total focus now is on the 4 S's and driving that to achieve shareholder value.
That's great. Thank you very much indeed, David. Danny, if I can just return back to you, are there any plans to develop further product extensions / lines?
Yes, I mean, obviously a company at our stage of development and growth, we will continue to add new products. This is based upon the market demands as well as the demands from some of our existing or potentially new customers. So, yes.
Fantastic, thank you. And Daniel, I think we've covered this in the presentation, but is there anything you could expand how the elective surgery is recovering post-COVID?
I think what you've seen, during our first half performance was an indication of the recovery, at least here in the United States, from COVID. So we were very encouraged by our performance and the recovery. But right now, the United States, especially with the Delta variant, has lagged Europe. It seems like we're 2-3 months behind, and it's the Delta variant has made an impact in certain regions of the United States, where especially the states which vaccination rates were not necessarily as high as other states. So we've seen an impact on elective surgeries in some regions, but we're seeing those numbers start to decrease, start to certainly plateau, if not decrease. So we're very encouraged with, for the balance of the year, a continued recovery of surgeries. And not only that this is from ourselves, but we're also hearing this from some of our strategic partners.
Fantastic, thank you there, Daniel. Next one, David, I think if I can address that to you, it's can you please update your OTC listings? It's currently showing grey market.
Sure. That listing is not something that occurred with the company's consent, and we just have nothing to do with it. So we're listed in the UK and have no involvement with the OTC listing in the United States.
That's great, thank you, David. And back to you, Daniel. How is the progress on the heart valve replacement and corneal implants progressing?
So those activities occur with our GBMV division in Germany, and the corneal market is still strong, but they too have been affected by COVID, and we're seeing a recovery of the corneal transplant business. On the heart valve activities, we're very focused on our 4S plans, and so we put a pause on some of that heart valve work during COVID, and it's something we will continue to review as we move forward. Again, we're very focused on supply, sales, sustainability, and so there are some projects where we put a pause on.
That's great, thank you, Daniel. Penultimate pre-submitted question we have here is, you have an exciting and in many ways a unique range of developed and developing products for the healthcare market. Are you satisfied that your marketing is producing the results that the board expects?
I think our board was certainly quite pleased, with our marketing. So, we have a hybrid commercial structure where we have some products which are distributed by Tissue REGENIX, but then we also have a number of strategic partnerships where the companies that we partner with are responsible for the sales and marketing. And given our first half performance, I think our performance was above expectations. So I think our board is quite pleased with the marketing efforts that have been realized to date.
And just to build on Danny's comments, one of the slides he reviewed talked about the global tissue engineering market, and I think it was a 14% compound annual growth rate, and compare that to our 21% growth rate in the first half. So, we took share as we recovered from the pandemic. So it's, it puts our performance in a broader context of the markets that we participate in. So I think it's important to note that.
That's fantastic. Thank you both. And the final pre-submitted question, David, one I can direct to you, please, is when do you think the company will reach a break-even position?
Sure. I think we kind of touched on that in the presentation, that we're confident that the funding that was raised in June of 2020 will fund the company to sustainable or break-even position.
That's fantastic. That concludes the pre-submitted questions. Obviously, you can see, Daniel, David, the number of questions we've had for you. We've got quite a few attendees on today, and we've got a number of questions, so thank you to everyone who submitted those. If I may just address you to that Q&A tab, if you could just click on that Q&A tab, start at the top, and where appropriate to do so, if I may ask you just to read out the question and give your response, that'll be fantastic.
I'll take this first question from Rags In. Pardon me as I look down to read it. Interesting not to find any indication of sales originating from the collaboration with top 10 biomedical company announced in 2020, while the D-cell portfolio recorded a 12% reduction for H1 2021. Any indications of this trend reversing in H2 2021 and orders returning from the top 10 biomedical companies? So Tissue doesn't disclose sales revenues from specific customers in its financial report. So that's not something that we would be disclosing, since it's baked into the total revenues for the group. On the D-cell portfolio, they were hit harder by the pandemic. Encouragingly, started to bounce back in our second quarter, much like the orthopedics and dental division did. So we're encouraged that will continue into the H2 of this year.
Just to add a little bit to that additional color, that our BioRinse portfolio is a little bit more diversified in terms of different markets, different indications, versus our D-cell line is a little bit more focused in certain specialties. So as a result, that's why the BioRinse product lines saw some better performance than the D-cell line, but we're still confident about the longer term prospects for all of our businesses.
So here's another question from Rags In that I think you can respond to, Danny. It is understood that the company in the past had issues with scaling up of human tissue procurement. In the last update, we have been informed that you have increased the HT, human tissue procurement levels, by 16%. I am keen to understand, number one, if that 16% increase is enough to support the revenue growth to 50 million, and number two, if not, is the company confident to be able to source the required human tissue to support growth as the demand for the products increases?
As we mentioned, one of our 4 S's is supply. And one aspect of supply is not only our ability to process the tissue, but it's also having adequate tissue supply is fundamental to our growth. So this is an active, ongoing activity for the organization. We on a daily basis are looking at our plans, our demands for tissue, and we continue to readjust. And whether it's looking at existing recovery partners or adding on additional recovery partners. So this is an ongoing activity, and as we continue to grow, we're confident that we have the resources, the infrastructure to add additional donors as the market demands dictate. Our phase 1 expansion gave us 3x donor storage capacity from what we had previously. So that's and we still have a lot of headroom in our donor storage facility right now.
Question from Jeff G. Question for David. Can Tissue REGENIX progress to quarterly financial reporting? It's not a current requirement. Should it become one, we certainly would comply with it. So we will maintain, regulatory compliance in our financial reporting. And right now, it's just the interims and the annuals. Question from Michael M. Do you think the continuing growth and expansion will be self-funded, or will you need to go to the markets again to raise more funds? I think Michael, we addressed that in the presentation that, you know, our third F, sustainability, we expect to get there with the funding that was raised. And so, you know, the fundamental tenet of sustainability is being able to fund the growth of the group without reliance on external capital. So opportunistically, if there was a financing alternative that made sense, we would certainly consider it, but we would want it to be opportunistic. Peter D. Can you give a Q1 and Q2 sales breakdown? I'd like to know what the progress has been so far this year. Would the trend be a good guide for H2? I think, you know, we mentioned in the presentation, you know, our first quarter was up and up against our expectations slightly. Where we really took off was in the second quarter, and as we started to engage with that backlog of elective surgeries, and showed a strong positive variance to our forecast. So Danny mentioned, you know, the emergence of the Delta variant adds a wrinkle that was not in our forecast, but what we have seen is as the pandemic has progressed, kind of the waves of the pandemic, the amplitude has decreased. And so we certainly saw in mid-July into August an effect of Delta, but we're beginning to see in the southern states the hospitalization rates declining and infection rates decreasing. So that should be a positive development for the balance of the year.
Well, the other thing we also saw was, at least here in the United States, a lot of vacation vengeance. Also, a lot of people, I think the travel industry has reported that in July that they were at 80% of the travel levels. But interestingly enough, the fares that are being paid are about probably between 15 to 20% lower than previous years. And it's really an indication of that it's all the vacation travelers who, of course, want the cheaper flights and to take their families to Disney World or wherever. And it's not the business travelers. So it's indicative that we've heard all these reports about here in the States about how everyone was so tired of being cooped up and wanted to travel, vacation, visit family members, etc. So we definitely saw that here in the States during this summer.
Question from Stephen C. When you increase profitability, will tissue suppliers naturally negotiate higher supply costs?
It's not necessarily related to profitability, but I think tissue suppliers will try to negotiate higher suppliers just really based upon demand. But one of the things we counter that with was, again, we're constantly looking at our donor sourcing. And so we have the opportunity at all times to negotiate better rates, as well as have a longer term agreements. So this way we can help lock in the fees for the tissue, as well as also lock in the amounts that they can increase on an annual basis. So we certainly will see some increase, but it's not necessarily related to profitability aspects.
I want to mention some of the contacts we've had with other industry players.
Yeah, the other thing that we also do is we as an organization, not only with our relationships in the tissue industry, not only are we looking at the traditional recovery partner sources, which are tied to organ procurement organizations here in the United States, we also work with other tissue processors. So other tissue processors may or may not have an excess of certain tissue categories, which we might need, or they might need tissue from us. So that's something else that we also look at moving forward.
A question from Alistair L. Congratulations on your results, David. You mentioned that your cash should fund the business through to profitability. Can you talk more, please, about the sensitivities here in terms of potential need for future debt equity raises? Obviously, the greatest sensitivity would be the timing and extent of sales revenue. The benefit, we talked about looking at our burn rate, and our EBITDA loss decreased 48%, and we've got our burn rate at a sustainable and manageable level. So we feel confident that we'll continue to drive that sales revenue to make us sustainable. And Danny went into we disclosed in the filing that the phase 1 capacity expansion should, serve the needs of the group on the short to medium term basis. So, from the phase 1 expansion and the operational improvements that we've addressed here at the Cellrite facility, it really gives us flexibility to not have to do it, but to do it when the business dictates. And by the time the business dictates, it will be in a sustainable position. Question from Rich T. Update on white label opportunity with the unnamed top 10 corporate.
Again, what's the question?
Update on the white label.
So that as I might have mentioned in the past, when that product was introduced to the marketplace in 2020 during COVID. So unfortunately, the procedure that product is designed for was affected by the cancellation of elective surgery. So, but the initial feedback from that product when it was put in the hands of clinicians, 90% of the surgeons said that they would use that product again. And so it was a very positive feedback. We are constantly, of course, in communication with this strategic partner, and they're still very bullish on this product. And it really is just a reflection of the return, return of this particular elective procedure. They're seeing to start to see some increases in those procedures. I mentioned to David that I ran into one of the clinicians who has used this product, has actually given some webinars about his use of the product. And he didn't know who I was. But I mentioned that we are the processor of this particular product. And his eyes just lit up. And it was it was very exciting to see how excited he was about this product. And there was another surgeon there, and he said, "Hey, have you tried this product? You've got to try it." And that level of excitement is for to see an orthopedic surgeon react that way was very very exciting.
Yeah, as I mentioned, we were just at the AAOS, or Academy of Orthopedic Surgery, and we visited with this customer at their booth, and I saw firsthand a demonstration of the product to an orthopedic surgeon, and like Danny said, his eyes lit up, and couldn't believe how simple it was to use. So it is, great to see that level of physician engagement for a new product. Next question from Martin H. Could you split the phase 2 expansion into 2 parts, for example, of 5 additional clean rooms each, or is that not possible logistically?
No, that's a great question, Martin. We have looked at that, of course, and the issue is that there are just some parts of our phase 2 expansion that just need to be implemented. So it's really not the number of clean rooms, it's all the ancillary facilities and equipment that we have to have. There's almost like a boilerplate level of things that we have to do. So so it doesn't necessarily save us a lot of time or as well as cost if we just add, say, 5 clean rooms versus 10, mainly because we're still going to have a sterile processing facility. We're still going to have certain pieces of equipment, certain this, certain that. So, but it is something that that we have looked at, and if we find a way to do phase 2 at a lower cost and a shorter timeline, it's certainly something that we will consider.
So, question from David T. Are there any plans to shrink the number of shares in issue by a re-rate? We discussed a share consolidation at our last presentation, and it's something that we discuss at our board meetings on a regular basis. And it's not something that is on the books for the group in the near term, but it's something that is, on our radar screen, and we continue to monitor when the timing for that would be appropriate. Question from Hugh J. Do you have enough current supply and or demand to maximize the additional San Antonio phase 1 processing capacity that came online in June? Or do you still need the market to recover from the impact of the pandemic?
We certainly have enough current supply to supply the current demand, and we certainly have enough headroom in our capacity and supply to continue to grow. So yeah, I just wanted to see the question. Sorry.
You guys stop asking really long questions.
So yes, we are still waiting for the marketplace to fully recover because we don't believe it has fully recovered, and certainly not only do we expect our existing partners and distributors to recover, but we continue to look for new partnership opportunities.
Question from Himal S. What can we look forward to in the next few years, and at what sales levels would you look at any potential overseas expansion taking place?
What did we just talk about? Yeah. So certainly one of our focuses is to provide enough supply to the U.S. market. Again, we source, most of our commercial activity is here in the United States. But as we have additional supply, we will certainly, we have some international distribution now, and we will continue to expand on that, especially as we have more supply. And this is specifically on the human tissue products. Over in Europe, in our German division has the corneal valves, and they are looking at increasing their supply as well as their opportunities to provide corneal implants. And then in Europe, we received the CE mark last year for the XT product, which is the xenograft ligament product. Again, this was another product that was introduced during the COVID. So we're waiting for some of those elective surgery, ACL surgeries, to resume in certain markets. We also have, since it is a new product, it is the only xenograft tissue product. We're to get it into new accounts takes some time, as we mentioned earlier, about the need to go through certain committees to get new products approved into certain institutions.
Daniel, David, thank you. I think you've pretty much addressed all those questions you can from investors. And of course, if anything further does come through, then do please feel free to pick it up if you can. The company will review all questions submitted there, and we'll publish those responses where appropriate to do so on the Investor Meet Company platform. And with that, David, perhaps Daniel, even if I could perhaps hand back to you just to wrap up before we redirect investors to give you some feedback, that would be fantastic.
So, anyway, again, I think in summary, you've heard today what our focus is for the organization. The 4 S's, supply, driving sales to lead us to sustainability, and then combined to scale. So this way, we will continue to grow this company long term. Our first half of 2021 was very encouraging, and we look forward to hopefully the same type of performance for the second half of 2021. Our capacity is good here for our company in terms of being able to supply the products, which in the past has hampered the company's growth. And we are just looking again positively toward the future as the markets recover.
I think from a financial point of view, just a quick summary, our H1 21 exceeded our expectations. A 21% constant currency revenue growth coming out of a pandemic. The tremendous operating leverage that the business generated. We've grown sales, but we've also tightly managed our expenses, and that 48% decrease in our EBITDA loss on a 12% revenue increase is a concrete example of the kind of focus and dedication that we have on the 4 S's and how that will achieve shareholder value over time.
That's fantastic. Daniel, David, thank you again for updating investors today. Could I please ask investors not to close this session, as you'll be automatically redirected for the opportunity to provide your feedback in order that management can better understand your views and expectations. This will only take a few moments to complete and be greatly valued by the company. On behalf of the management team of Tissue REGENIX Group PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Thank you and good afternoon.